Todd VanDenburg here with VanDenburg Capital Management and the Uncommon Sense Update. Greetings and thanks for watching. So last week, the stock market finished up again. All three indexes finished up, marginally, but still very positive, results, and we like that. Some things that also happened last week is that it was announced that Jerome Powell is likely to succeed Janet Yellen as chair of the Federal Reserve. We see that as pretty good news because we think that Jerome Powell will probably raise interest rates a little faster than Janet Yellen would have, and we think that's something that the Federal Reserve should be doing. We think the Fed's monetary policy since the financial crisis has been not as positive as many would argue, as evidenced by the fact that when you look at the $4+ trillion that the Fed printed with the anticipation that it would go into the economy, that a huge chunk of that was actually just left at the Fed in the form of excess reserves because banking regulations got strict and the banks didn't feel like that they were going to take the risk of lending that money and instead just deposited it back at the Fed. So as Chairman Powell goes to address some of these regulatory reforms and interest rate changes, we see excess reserves coming down. We see the quantitative easing balance sheet, the adjusted monetary base of the Federal Reserve coming down, and we look at that as all positive news. Also coming out last week, 81% of the S&P 500 has reported earnings so far. Of the 81% that have reported, 74% of them have beat their earnings expectation, and 66% of them have beat their revenue expectations. So again, corporate earnings continue to grow. That's all positive news. Some are arguing that the stock market goes up because of anticipation of what I'll talk about next. But, the reality is that as earnings rise, so does the stock market. So if we continue to see the trends of positive earning results, we would expect the stock market, typically it goes up when that happens. Not always, but it typically does. The other big news that came out last week was that in the House of Representatives, they rolled out their Tax Cuts and Jobs Act. Now, that's a 429-page document. I'm mostly the way through it. There's a lot of hyperbole, we see in the news, some people talking about how it's just a big tax cut for the rich, and that's a little simplistic, and so I'm doing a lot of analysis on that. But what it does seem to be is not a great situation for people that live in high taxation areas or areas that have high cost of living, because many of the elements of this new tax code don't seem to take into effect or into account that it costs more to live in San Francisco than it does in Omaha, Nebraska. And so while we in general think that some of the elements of the tax bill are going to be probably positive for the economy, which is positive for the stock market, we still have a little more analysis to do before we can really cast judgment on it. In the end, it might end up being, good for most, including some wealthy people, and not so good for some. And when it comes to, national legislation, that's often the case. Some people don't benefit while others do. So taking the whole political angle out of the equation, we'll be looking at it pretty hard. But, the 20,000-foot look at it right now makes it look like, it probably will be good for most families, but just not the families that live in some of the highest cost areas. But stay tuned. We'll be talking more about that in coming updates. So that was your update for the week. I hope you enjoyed it. If you enjoyed this video, please give us a like or feel free to share this video. And we'll be back with another one next week. Thanks for watching.